So a quick recap of this week's market action. Certainly we do know that all the attention had focused squarely upon the Fed FOMC meeting. The surprising hawkish turn by the Fed in terms of their forward guidance and view towards the December hike had taken much of the market by surprise. The dollar index actually did shoot up to 92.697, the week's high, before paring back some of these gains into the end of this week. Equity markets in the US, however, have been largely resilient, much unperturbed by this event. On the other hand, Asian equity markets did feel the squeeze as the MSCI Asia Pacific actually declined from the 10-year high that was printed in this week. The tightening bias from the Fed did indeed create some stress for emerging market assets. So for the upcoming week, what are some of these items that we are going to look out for? Once again, for the full suite of events, do head on to the IG.com to see the IG economic calendar, but I'm just going to highlight a few of these key items. So I do think that this US focus had only heightened after the Fed FOMC meeting, and next week several items, namely the US data itself, Fedspeak, and also the anticipation for tax plans are just going to be some of the items that's going to heighten volatility for those trading US assets. So with the Fedspeak, there's to come some of the high-profile members, including Fed Chair Janet Yellen, Lael Brainard, and the known hawk New York Fed President William Dudley will be some of the members due to speak in the coming week. I do think the market will continue focusing on such talks in terms of justification for their hawkishness and also much of their longer-term outlook. And previously, we do know that House Speaker Paul Ryan did promise a tax reform plan due before the end of this month. So we do look out for the item in the coming week, the last week of September. Should we actually do see disappointment over here, I think that would be the greatest fear for many of these purged equity markets in the US, and an attack to the global confidence in equity markets as well. And last but not least, we have Q2 GDP, the third reading of which will be due in the coming week. The market is currently expecting the data itself to tick up slightly to 3.1% quarter on quarter, according to the market's median consensus. And should that be the case, I think that's going to be another boost for the US markets once again. So do look out for these items, and for trade wise, I will focus a lot on dollar yen. So dollar yen itself actually did touch 112 spot 50 level in this week, showing quite a bit of strength over there. Should we actually do see that continue, do eye the upward pressure towards 113 figure. On the downside, do we actually see that slightly could actually bring prices much lower, eyeing the support around 109 spot 20. Having said that, dollar index is another one to keep out a look for. But for Asian markets over here, I do think that next week is going to be another interesting one as well. So on the Japan end of things, there are also leads to look out for following the Bank of Japan meeting this week. BOJ July's meeting minutes will be due, but more importantly, Friday we are going to get a barrage of data, and that includes the CPI data from Japan as well. So the upcoming reading itself is expected to tick slightly to about 0.7% year on year, and that itself is really a step in the right direction, despite the fact that the Bank of Japan themselves do recognize that there's still a distance from the 2% target that they are looking for. And having said that, should we actually do see that trend, it's actually quite a boost for the US dollar against the yen as well. And in addition to that, we also have Chinese data that's going to be due in the coming week. The Caixin manufacturing PMI will be released on Friday during the market hours before the Golden Week holiday that is to come in the following week. So on one hand, we want to watch how that piece of data is going to affect regional markets as an early September release. On the other hand, do look out for Chinese market performance that could weigh upon the region, as retail investors tend to actually be on the short side ahead of long holidays. So do keep a lookout over there. And for the Singapore market, we have industrial production and CPI data among others.